meeting. We've got hundreds of people joining us today. So thank you all for being here. This is a continuation of our informational sessions on the American Rescue Plan, and specifically the coronavirus state and local fiscal recovery funds and what they mean for the state of Iowa. For league members, we continue to add resources to our website. We've got a tab on there called the American Rescue Plan Resources right on the front page. So as you're looking for information or additional resources, links, do go there, and we're trying to keep that as up to date as possible. We'll be adding everything new that we do receive. Joining us today is one of the people who worked in DC on behalf of this legislation securing these funds. Irma Esparza Diggs serves as the Executive and Director of Federal Advocacy at the National League of Cities, of which the League and many cities in Iowa are a member. She is a seasoned public affairs professional with experience in public, private, and nonprofit sectors. Irma, thank you so much for joining us today. I will go ahead and turn it over to you. I know we've got a lot of people who are really excited about this, and if you need anything, don't hesitate to let us know. Thank you again for being here.
No, I appreciate it, Robert. Thank you for the introduction, and thank you to Alan and Aaron and just the entire Iowa League of Cities team for the work you've been doing in partnership thus far in helping to secure local relief for all of the municipalities in the great state of Iowa. It's a pleasure to be with you today. The moment has finally arrived when the Department of Treasury, who is the issuing agency of this $65.1 billion that's coming to municipalities of all size. That day was last Monday. I think it was May 10th. And within 72 hours, the National League of Cities, we held our first webinar on it. And we had over 3,000 city leaders from across the country joining. So we know that there is a lot of interest in really understanding what are the allowable uses, but also what are just the basics of receiving those funds. And so today I will walk through the interim rule, talk about what Treasury has released, talk about the guidance that would be helpful to you. But I will start off by saying, when Treasury released the interim rule on last Monday, it is effective immediately, meaning it's in effect now. They issued the distribution allocations for metropolitan cities. And I think in this country, there are a little over about 1,100 of those municipalities. We have not received, Treasury has not released the distribution allocations for non-entitlement units of government. So meaning those units of government below 50,000, we are still waiting on that information. But I think with what Treasury has provided thus far is a good start for all of us, regardless of the size of our community. So we can begin to think strategically about how we are going to, what are the allowable uses, and frankly, be able to really think through and bring together all of the relevant stakeholders within your community to create a plan of action. The other thing I will say is that this fund, and you all have heard it before, this is very much a new federal program that, because of how CARES Act funding was rolled out, it only went to those units of local government 500,000 with a population of 500,000 and above. And because cities across this country received the information and the funding from their states in a very haphazard way throughout the pandemic, a lot of us didn't see the emergency relief we needed to see in order to deal with this natural disaster that has wreaked havoc on not only our public health systems, our families, individuals, businesses, but also the overall economic health and fiscal stability of municipalities. I also know that this pandemic has hit communities in every state differently, and even within a state differently. Some municipalities have been devastated economically and have had to make severe layoffs, severe cuts to overall government operations, while others have been able to maintain, be floating throughout it, either by drawing down on reserves, drawing down loans to be able to maintain services, while others have had no impact at all. What we see through the American Rescue Plan Act, which we fought so hard to, not only for state governments, but for local governments, is to have the flexibility for you to use these funds to address your revenue losses, the economic and health impacts that the pandemic has wreaked on our communities, but also some allowable infrastructure uses. And so I'm going to go through and talk about that. If you'll do me a favor, and I have a lot to cover in this presentation, and I hope that I'll be able to answer a lot of your questions in this presentation, but I'm going to leave some time for question and answer. And so you can put those in the chat box, and Jess and the others will help me manage those questions so I can speak to some of the most frequently asked. The other thing I just want to say is that Treasury, we are pleased as an organization because we see for the first time a lot of our recommendations and a lot of the concerns that we raised as municipalities embedded in the interim rule or the guidance that Treasury released. That's very different than the guidance that was released during the CARES Act. And so while this guidance doesn't give the specific direction that I know some are still craving for, we are very much in that same boat. It does go a long way in meeting the needs of municipalities, regardless of size. And so I want to start off by saying that. I also just want to say that, we are at the start of this journey. I think one of the bright spots that we saw in this guidance, recognizing that there are different fiscal years for municipalities in this country. The pandemic has hit communities differently. And frankly, I think some communities are still bracing for the true impact and the loss of property taxes and those respective tax payments. These funds can be spent or obligated through 2024, so the end, December 31st, 2024, and then they can be actually spent through 2026. And I'll talk about it in a minute, but you'll receive the funding half up front and the other 50% 12 months later. And so you can really take your time and be thoughtful and strategic on how to spend the fund that has the greatest flexibility, but also know, as we as an organization have provided webinars throughout this entire year since the bill was passed, actually, we have provided webinars to provide you all a summary about all of the federal funding that's coming into your communities for emergency rental assistance, childcare, vaccine distribution and testing, mental health, opioids. There is federal program funding that is dedicated for specific purposes coming to your state government, your schools, your higher ed institutions. We really, NLC has provided an overall summary of the overall $1.9 trillion that's included in the ARPA package. We want you to know about all of that funding that will go to help support families in need, businesses in need, and really help to stabilize your overall local and state economy. Get to know what those other program funding efforts are so that you can use this fund, which has the greatest flexibility to meet needs that are still there. So I'll go into this. I talked about on Monday, May 10th, was when Treasury initially released what is the interim final rule. Just today, the Department of Treasury published the notice in the Federal Registrar register related to the state and local relief fund. There is a date of July 16th as the deadline by which to file comments. You are all welcome to do so directly. I know the league is also considering to do so. We at the National League of Cities will also be responding. And I'll talk about that in a minute. We are looking nationally and really addressing what are some of the overarching concerns that are applicable to all. What are the outstanding questions we have? And I'll talk a little bit about that as I go through this. But we will be filing our own comments letter probably towards the end of this week. We want to make sure we give the Department of Treasury as much information as soon as possible so that they can begin to answer a lot of the questions that we are seeing from cities across the country. They also released a frequently asked questions document. So if you Google Department of Treasury, coronavirus relief funds, state and local, you will see their one page where they've released the final rule, frequently asked questions, which is a great cheat sheet. NLC, we have our own as well, but you will also see the allocation for metropolitan cities. So if you're a community 50,000 and above population, you will see how much you have coming to you. They also release what is a portal where metropolitan cities can go and input your financial information to be able to receive that financial transfer. And again, I talked about how pleased we were to see our recommendations and guidance that we gave the Department of Treasury through our consultations with them adopted into the final rule. And this is very much, I started to say earlier, a journey. We're at the start of that journey, right? But with input from you all, this week, I think we're meeting with 14 state municipal leagues from across the country. We're taking all that we learned from you and reiterating or underscoring to Treasury what glossary of terms we need identified, what are some of the reoccurring questions we need them to answer sooner rather than later. So going into the framework of the interim rule and what it says, it really goes through and lists what are allowable expenditures. And it's non-exclusive, meaning it just gives you, it doesn't rule out what you can't do. It gives examples of what you can do. And so and this money overall, you see one of the big takeaways for me is that this is very much forward looking. What can you do and how can you best use this money to address the needs that have arisen as a result of the pandemic that exists today? And what are the ways in which you can expend it? So in other words, they want you to put this money to work, to put people back to work, to address the issues that frankly created a disproportionate impact on certain communities living within your municipalities. So you can create programs or efforts in dedicated qualified census tracts. So in other words, if there are certain census tracts that meet poverty lines or that fall within certain poverty categories based upon the average median income, public health, direct aid, community economic development, infrastructure, those are all allowable expenditures. They really work to encourage expenditures in areas that go to address racial disparities, economic inequities, and really go to meet the needs of those communities that have been most disproportionately affected by the pandemic. And what that means is looking at your COVID rates, where did you have higher incidence of COVID cases? Where have you had more deaths? Where have you had more people out of work? What are the sectors and where that is? And be able to really target relief to essentially lift all boats. The prohibited expenditures, they're very clear about this, is that you can't use these funds on pensions, legal settlements, and federal match requirements, unless that federal program dictates that you can. One of those programs is FEMA, where you can do 100% match. And so those are the prohibited expenditures. Overall, the framework to assess the eligibility for projects or services that you would like to do utilizing the local relief funds for ARPA, essentially, these are the 4 questions you would ask yourself, right? And you really have to justify how you spend it. And, you know, the first is really what has been the harmful effect, you know, on COVID-19 that this funding will go to address, really delineate what that is. Assess what the connection has been between you spending these funds to the pandemic and the impact of that pandemic. You also want to assess for disproportionate impact on distressed sectors or populations. Have the data related to that. So essentially be able to justify any expenditures by looking at the economic data or what the data says from a public health and economic standpoint, and really determine how you're going to prove that by you utilizing the local relief fund this way or expending it will essentially allow you to realize a certain outcome. So in terms of the first group, and I know there aren't a lot of communities over a population of 50,000 in the great state of Iowa, but just know that those are the communities that received the information in terms of exactly how much it's coming to them. We checked in with the administration this morning, and we don't yet have a due date on when the non-entitlement units of local government will receive the funding. But I will say for everyone, the funds will go out in 2 tranches. 50% will be provided beginning at last week, May 2021, and the balance will be delivered 12 months later. So when you eventually receive your funds, from the date you first receive it, 12 months later is when you're eligible to receive your second half of your funding. Metropolitan communities can already begin applying for those funds through the online portal. And specifically, non-entitlement units or those small communities below 50,000, you will receive your money sub-allocated through the state within 30 days of the state's receiving that money, and you'll receive your second payment again 12 months after receiving that first payment. I know the Iowa League is in conversations with the governor's office, the state budget office as well, about what their plan is. To be honest with you, all state governments are kind of in limbo. We've all been waiting for additional guidance from the Department of Treasury on, you know, what they're going to tell states on how to sub-allocate the funds. We do know, and Treasury has confirmed that they are going to make it clear that the state government's role is just to sub-allocate that funding, right? Not put any additional conditions on the use of those funds, which is what we saw through the CARES Act. So let me just move forward to the next slide and bear with me 1 second. So in terms of the metropolitan communities, the Department of Treasury has requested a DUNS number, a SAMS account number, an authorized representative, contact information, and the fund transfer. You know, when non-entitlements governments will receive their funding, you will have to submit what your DUNS number is, your taxpayer ID number. At this point, I don't know what else they will require the state governments to receive as a result of that funding transfer, but just know that metropolitan communities, the individual that's logged on, and I know this because I've gotten a couple of questions, why do I have to insert my own personal information? That's because they want to verify the people that are submitting this request on behalf of the city. So just bear with us, because I think once Treasury releases the information on the distribution amounts for non-entitlement communities, we'll get more information of exactly what you have to do as a small government to receive your funds. We've also stressed to the Department of Treasury just the different capacity of municipalities, with some municipalities essentially having a part-time mayor and maybe a city clerk, like how to just make it for a municipality, regardless of size, to be able to not just want to access these funds, but have the capacity to do so. So what's the most basic of information that a municipality can provide their state government in order to receive this money? Because since this is a new federal program and this is the first time we are doing this, there's a huge learning curve, right, in this for us all. But we want to make sure that cities feel as if this process is easy enough and the process isn't overly burdensome, that none of us leave money on the table. So I talked about what we expect to receive related to non-entitlement units. I talked about how states cannot further restrict it. You will need your DUNS number and your banking information. So that at a minimum is what we know that the Department of Treasury would like to see. And Jess or Aaron, I see people are coming into the room and I'm admitting them, but I don't know if you can see it. If you can also admit them, that would be helpful. All right, so these are the 4 categories of eligible uses, and I'll talk a little bit more about each one of them. But just as a reminder, essentially, this is where I say that you as a municipality have the most flexibility in the use of these funds. You can use these funds to respond to a public health emergency that has arisen as a result of the pandemic, or any of the negative economic impacts. And that includes providing grants to households, small businesses, nonprofit organizations. You can actually, as a city government, transfer your funding to a nonprofit organization, other public benefit corporations. You just have to make sure other state or city governments, and counties and state governments can transfer their funding also to you. You just have to use it for the intended purposes. And so if you are transferring the fund to a nonprofit, you have to be very clear to that nonprofit what objective are they helping you to achieve by them receiving the funding, and you will be held accountable for the reporting of that funding or audit in case Treasury comes back. And that is one thing I do want to say, like Treasury did include in there, if they receive word or public notice questioning the use of funds, that they will then at that point investigate and give the municipality an opportunity to respond to that question. And so you'll have an opportunity to make your case, but it just goes to show you that you as a municipality, what is just as important as setting up your plan on how you're going to expend these funds, what is just as important is your record keeping related to these funds. Because there is an audit requirement, there are reporting requirements, and you have to closely align the use of these funds with the need and be able to do so. Moving forward, again, we've talked about this before, but you can use these funds to provide premium pay for those municipal workers performing essential work. They essentially have to be in person. This does include public safety personnel or anybody who their work is directly tied to the pandemic. And again, I talked about the reduction of revenue. That is an allowable use. It does allow for complete revenue placement. And one of the questions that we have provided to Treasury and asked for clarification is, if a municipality, let's just say you have loss of revenue equal to $10, and you want to use a portion of your revenue funds to address or offset that loss of revenue, but you need to put it in your general operating fund. We want to basically say to Treasury that that is what categorized that expenditure as a loss of revenue and ended there, as opposed to then tracking those dollars to measure what they were spent on. Just as long as a city can attest that this amount of money was used for revenue replacement as a result of this loss and be able to document that loss, that's what we're asking Treasury to just make as the necessary justification. So you don't have to follow every dollar related to loss that goes into your general operating fund. The other thing that is allowable is use on water, sewer, and broadband infrastructure. And I'll talk a little bit more about that in a minute, but essentially think of it this way. For water and sewer, it's anything that essentially is tied to an EPA program, anything that you would use your state revolving water fund for, those would be allowable water projects. So in terms of eligible uses, and I see my questions are going in there, and I'm close on time, so I promise I'll leave enough time to answer as many questions as I have the ability to do so. And Alan, if you need to jump in and stop me at any minute, just please just jump in here. But with respect to the pandemic or negative economic impacts, these are the examples that Treasury provided as an allowable uses. So you can use these funds to help prevent the further spread of COVID-19 or mitigate COVID-19 from spreading. You can use it for any medical expenses related to COVID-19, anything behavioral health wise, including addiction treatment, is an allowable use. An allowable use for public health and public safety employees, anything related to what they need as a result of the pandemic. Data was key, and I thought that was interesting. They want you to be able to invest in the data systems and the data management software to be able to address and strengthen and improve your health programs, essentially to prevent this from spreading in the future and utilize that data to be able to make our response stronger in the future. Again, I talked about it earlier with regards to specific communities that were most disproportionately impacted, but across the board for all of the residents living in your town, those without health insurance who just going to meet their needs and address the health disparities, as well as providing survivor benefits for those that have been most impacted. I know there are many examples of where families have lost both breadwinners as a result of this. And so that's where you see Treasury providing examples of how municipalities can step in. I talked about the qualified census tracts. There is this presumption of eligibility, meaning you can provide direct cash and loan interventions. You can provide assistance to your business, your nonprofits, help support those industries and workers that have been most disproportionately impacted. Housing and community development, you can go so far as to build new housing units addressing the issue of homelessness and childcare and education, but they have to be within those qualified census tracts that essentially meet poverty guidelines for your area in order to justify use of that funding. So you see, it really allows you to meet the targeted need in your individual communities. And I think that's particularly important for those communities that didn't see a significant loss, but you still had people in your community, frankly, that have been just devastated. I'm going to take a drink of water real quick. So I won't spend a lot of time talking about premium paid eligible workers, but just know that we will have an executive summary on what you all as employers and how this guidance will impact you as employers for your municipal government for your local government employees, but also just you can provide premium pay just to those eligible workers performing essential work. And I think the maximum amount was up to $13 an hour, no more than $25,000 above and beyond just what their regular pay was, but their work has to be specifically tied to the pandemic. And it has to be in person. So no one doing desk duty, but teleworking from home. They actually have to be in person. And this is an example. We pulled out the list of workers that they included that you see here. And so I talked about briefly, I mentioned the infrastructure uses. This is what is eligible related to water. You can see here the Clean Water State Revolving Fund. Any projects that are eligible under that program would be eligible here. And I know many of you are probably taking snapshots of this. I encourage you to do so because this is your cheat sheet on what you can, when they talk about water infrastructure, this is essentially what it means. Also, you'll see here cybersecurity. They do make an allowance for a city to invest in securing up the cybersecurity of wastewater management systems so it's not susceptible to being hacked. Also addressing the issue of climate change and resilience and lead service line replacement. This is one particular area where the National League of Cities will provide additional webinars and content. And I'm going to stop here because I meant to say it at the very beginning. But I know all of you all are members of the Iowa League of Cities, and you may not be necessarily dues paying members of the National League of Cities. Well, I would like for you all to become members of the National League of Cities. Not only does it help in our advocacy efforts, but we've been working for you and we need you to be a member so we can continue to develop the programming that you will need to be able to effectively utilize this federal funding that's coming for you or coming to you in the next coming days, but also be able to understand what is still not coming to you and what we need to be able to pivot and ask for in a comprehensive infrastructure package. So there will be a slide at the end and I'll include the contact information for our membership director, but I want to encourage all of you all to become members of the National League of Cities. In terms of broadband, we were pleased to see that broadband was included as an allowable use. For those who are not broadband experts, let me just say that they do allow for broadband as an infrastructure use, but they set baseline requirements that, and I'm not a broadband expert, but my understanding is it doesn't necessarily give municipalities the flexibility that we need. And so we are going to be working with Treasury to improve this particular area. Again, this is where we really want to have you all be members so we hear directly from you on how this can be improved. But the overall broadband funding just does make it so that there's a bare minimum of broadband access across the board. And they want you to consider affordability. They want you to avoid investing in locations that already have existing agreements to build reliable wireline service. Again, that's one of the areas where we would like to see more flexibility, but it definitely does prioritize municipal, nonprofit, and co-op owned networks. So just know that, again, the broadband space is one of those areas where we see where there will be additional programming and content. Lost revenue. We also will be issuing or providing cheat sheets, if you will, that's what I'm going to call it, on how to calculate lost revenue. And you'll see in here, we have a couple of slides that speak to how to do the math. And we'll share these slides with the Iowa League so they can share them with all of you all. But essentially, you should, the general revenue draws on the census definition of general revenue of your own sources. One of the things we have flagged for the Department of Treasury, that public utilities needs to be included as a source of revenue for municipalities. That wasn't included in there. That's one of the things we hope to see change. What is excluded, you'll see here also refunds or other correcting transactions, proceeds from issuance of debt or sale of investments. Again, we want it to be an allowable use, that the reason that you took on debt or you sold investments or you drew down in your reserves was to be able to prevent massive layoffs and cuts. And then utilities, that's one of the things we want to actually get counted back as an allowable use. So stay tuned for more there. I talked about how you calculate the loss. Again, we'll share these with you, but this gives you the guidance that you need on how to best do that and work the math there. And so you each have your individual operating budgets and can work the math there. But stay tuned, because we will release those cheat sheets on how to calculate your loss. And here are the steps that we work through. But I want to make sure I get enough time for your questions. So you'll see here on how we encourage you to work through the math to assess your overall loss. So ineligible uses, I do want to go over these just once more. So in other words, you cannot use these funds on federal matching requirements unless that federal program says that you can, which FEMA does. You cannot use this on premium pay unless they are an essential worker and their work is tied to COVID-19 or any issues related to COVID-19. You cannot use this funding for unfunded pension liabilities or infrastructure not specifically addressed in ARPA. I know leading up to Treasury guidance, there were a lot of questions on whether or not people can build sidewalks and roads. Those are not allowable. Help us go fight for a full infrastructure bill. And then I talked enough about the rainy day funds and financial reserves. The reporting requirements, this is important for you. You must submit an interim report and a quarterly project and expenditure reports thereafter. We at the National League of Cities are working to develop templates if they are needed. Also, if you're a municipality with a population 250,000 and above, you will need to submit a recovery performance plan. And if you're a non-entitlement unit of local government, you are not required to submit interim reports or a recovery performance report, but you would be required to submit an annual project and expenditure report. So again, and I made this point earlier, as you are making your plan on how you're going to spend these local relief funds, you also need to be making a plan on how you're going to be able to account for the dollars that you're expending, the data related to how you made those decisions, and then what those reports would be. So you can have that in place as you are expending these dollars, and then don't have to go back and just rebuild this. If you have any questions related to the coronavirus state and local relief fund, you can email the Treasury Department directly. And here is their email here. They also have a call center that you can call. Also, if you want to take a picture of this, their website should come up, but they have a landing page where essentially I've reviewed, and this is how we came up with our summary. I'll put that back there for a moment. Again, we'll share these slides with everybody. And then this is the National League of Cities hub. If you were to copy and paste, I'll copy and paste this link. Oh, it's not going to let me do it. If someone else can copy and paste that link and put it in the chat, that's where you can receive all of the National League of resources that we create on how you can summaries on receiving the funds, summary on eligible uses by categories, allocations. We are creating our own frequently asked question page that we are producing as a result of all the incoming questions and the most frequently asked questions, as well as providing blogs that essentially summarize by issue, so you can just comb through there and see what's applicable. And if here is this HTTPS link right here, if that is a form you can go to actually tell us what would be most helpful for you. So and here is the information. Alejandra Pierce Torres is our Midwest membership person. This is her email. This is her phone number. This is how you can reach her. And I will ask her to follow up with the league to specifically share on how you can become a member of the National League of Cities, because I look forward to talking to you in the future. More so. So, all right, team, I guess I can take a couple of questions now. I feel like I've gone through a lot. And I'm going to stop sharing this slide so I can
Fantastic. Well, thank you so much for that. And Jess, I know you've been kind of looking at these. Do you have certain questions in a certain order, or would you just like me to look through a few of these?
Either, whatever you prefer, Robert. I have them put down an entire list, or you can.
Perfect. I will turn it over to you for some of those questions then.
Okay. One question that we've gotten: if they don't have a qualified census tract in our county, what options do we have to use these funds to help our community recover from the pandemic?
That's a great question. If you don't have a qualified census tract, you can still do it. You just have to essentially justify on how you're spending the need and how you're spending the money and how it goes to address a community that has been most disproportionately impacted or needs it severely based upon their economic circumstances. So it's just a matter of you justifying it and providing the data that allowed you to reach the conclusion that that was an important use of funds.
What happens to the funds if a city is not able to use any or all of the funds?
So the funds can be transferred to other government entities, nonprofits. You should really look at that because I think that if you feel like you can't use it based upon what I've preliminary covered, you should very much do a needs assessment to see how financially strong the nonprofits are within your community that provide food banks, ride shares, just what the overall social need is, because you have the ability to transfer funds, make grants to individuals, be able to, if there are individuals who are behind on their utilities, even though you don't own the utility, there's another utility, but you have residents that are behind, you can make payments to those people. So I feel like the guidance allows you to figure out some way to expend the funds. Worst case scenario, if that is not, I'm sure those funds will eventually go back to Treasury if you don't put in your information to receive those funds.
This question got asked a lot. Will water and sewer work require certain federal requirements such as Davis-Bacon? Also, if doing the water and sewer work requires you to tear up the street, will you be able to use any of the funding to replace the street?
Yes. So second question first. Yes. So essentially, if you're putting in lines to bring clean water into communities, you can use that funding to repave that road that you tore up in order to put those lines down. But if your road is like 6 lanes wide, but you're only doing the middle, you're not going to be able to do all 6 lanes. It's really going to be the road that was most impacted in order to put that line down there. And then the first question was related to water. Give it to me again. I'm sorry, Jess.
Will the water and sewer work require certain federal requirements such as Davis-Bacon?
Yes, so we believe so. But what we are asking Treasury is to be very clear about what those are, so that we have clarity at the onset. That's one of the areas where we've said to Treasury, you can't just give examples. You have to be really specific about what the requirements are, so that we know what those, whether or not we have to meet those Davis-Bacon wage standards at the onset. Not just Davis-Bacon, but any general accounting rules also related to it. So stay tuned on that. We hope to see more information coming with the specifics on what you do have to meet, including the single audit requirement, which is for any entity receiving over $750,000 in a federal grant, there is a federal single audit requirement that you have to provide. We are asking what that means for municipalities. And one of the things we do know is that if you have to pay an auditing firm, that would be a professional fee that you could use ARPA funds on, because that audit requirement is a result of receipt of these ARPA funds.
Perfect. Here's another question that has quite a few similar. Can projects being finished, you be eligible for funding, or only new projects? So current projects in the works, are they eligible?
I think so. They're not past projects that have already been completed, but if you have a project that's currently underway, I do believe that you can use it on a project that's underway, or a project that is coming. Yes.
One more question. How much of the public safety salaries can we count? Do we have to track the number of hours that they're responding to the pandemic, or can we just consider them responding to the pandemic like we did with the CARES Act?
Yeah, that's a good question. So I believe that police and fire emergency personnel, I need to, you know what, I don't want to give wrong information here. I believe that it is presumed that police and fire emergency personnel are responding to the pandemic because we are in a pandemic period. But let me confirm on that, and we'll follow up with the Iowa League.
Okay, another question. In calculating the general revenue loss, what revenues are excluded? Are the state CARES Act funding and FEMA reimbursements related to the COVID-19 excluded?
So in terms of revenue losses, I'm sorry, Jess, can you ask that question again?
Yes, so they're asking what revenues are excluded. If they've already received prior CARES funding or FEMA reimbursements related to COVID-19, are those excluded from the general revenue loss?
Yes, yep, those are excluded. So because essentially those aren't reoccurring sources of revenue. And also They are including state transfers or other intergovernment transfers. So for example, if the state of Iowa routinely shares X amount, each year, and this year they didn't because of the pandemic, you can actually count that as a loss of revenue.
Another big question is, can these funds also be used for highway, road construction, or other transportation infrastructure projects?
No. So if it's not water, wastewater, or broadband, it is not an allowable use. Yeah, period, full stop.
And another question that we got is on page 60 of the interim rules. It states section 602C1C and 603C1C of the act provides recipients with the board latitude to use the fiscal recovery funds. So government services can include, but are not limited to, maintenance or pay-go funded building of infrastructure, including roads. So does that not, can you use that for roads?
Yeah.
Then?
So I spoke to this during the presentation, and I didn't have the specific section. So thank you for giving me that then. So essentially what that person was talking about, it talks about revenue losses, and then it talks about what you can actually, if the money that you put into your general operating funds goes on to pay for those things, are those still allowable if the overall intent was to use the money to fund or backfill your revenue losses? What we have said, asked Treasury for additional guidance for, is that it should be an allowable use in the sense that once you were, and that's the $10 example that I gave, that if you have a $10 revenue shortfall and you use $10 of the ARPA money, that should be the only way you have to expend it. Full stop. It doesn't go beyond, you don't have to track anything beyond there, because when you do, then it makes it difficult for you to use this on loss of revenue. So hopefully that answered their question.
Another question is, I read a provision about supporting housing projects impacted by the pandemic. Could funds go to a regional housing trust fund to support housing improvement for people impacted by the pandemic?
Yeah, again, that goes to the qualified census tract if it is within that. If you don't have a qualified census tract, and you just have to justify on how building that housing would be a need economically, given that group or those people that are moving in there, their overall economics.
Great. Sorry, we got a lot of questions. Can we use the funds to offset raising utility rates?
Offset raising utility rates. If the, I would have to ask Treasury about that. I'm assuming that you have to raise rates in order to meet the needs that weren't able to be fulfilled because of loss of revenue or loss of utility payments. And if so, that is an allowable use. So I believe so. I think I just talked myself into an answer, but I want to be specific. So I will specifically ask that question of Treasury. And then again, I encourage everybody to reach out to Treasury directly also. Please know that the guidance I'm giving is not official legal guidance, but it's based upon our interpretation and reading of the interim rule. There are still so many questions that still have to be answered, but you should all feel free to contact Treasury, especially for your specific circumstance.
I'll ask one last question. Can you explain the counting of the funds? Should we establish a specific fund to receive the revenues into?
Yes. So in terms of how to best track the overall expenditures of your ARPA funding. So you know what different accounts the municipalities have. For me, if I were advising you, I think the cleanest way to track expenditures is to be able to have a separate bank account just for those funds, so you can see what the disbursements are related to that account, and then can be able to accurately create a delineation between that expenditure and the justification for that and where that went and the intended purposes, especially if you are doing transfers to nonprofit organizations. I think that's going to be key, and that's key to this data and information outliving your respective term. If you are in a term limited situation or decide to move on for whatever reason, you want to make sure that this data lives beyond you and your chief financial officers, right? So that's the first thing. In terms of the revenue, but just know that related to the revenue losses, we do hope that you can just put that money back into your general operating fund, and that's the only expenditure you actually have to account for at that point once you put it in there. I don't necessarily know about the interest generated from ARPA funds. I have to get back to you on that. But I don't believe so, because they didn't have anything included in the guidance related to interest. I will say that they are very clear that they don't want you to just sit and park these funds in a savings account that was a prohibited use. And I think, Jess, I may have missed one question, but I think I got them all.
But Irma, thank you so much for joining us today and for taking the time to answer so many questions. I mean, that must be invigorating, being able to go rapid fire like that. So thank you so much. What you said is inspiring. Think strategically, work with stakeholders in your community, and take time to plan. This is really about community recovery. And I think that's the most valuable way that everybody can think about this. So thank you again for being here and taking the time to join us. To league members, thank you for joining us. As Irma said, this is only the beginning of the journey. We're waiting for more rules, more clarification. There will be more questions, and there will certainly be more webinars as we get more information. As a reminder, on the league's front page of the league's website, there is a button there that says American Rescue Plan Resources. We've got links, we've got data, we've got information. We're going to provide links to the National League of Cities, to the Treasury. Everything we get, we're going to put up there for you to go to. It will be updated, so keep checking it. New Treasury guidance just came out last week. We threw it up there right away. We are putting things with a little date just so you know what's the newest information and what may be outdated. And be sure to watch your email for future league webinars on this subject and many others. Irma, thank you again for joining us. We appreciate it so much.
No, thank you, Robert. And I just want to say to everybody, because I do think it's important to end on this note, that it was hard. Like, it was a hard fight for not just local relief, but both state and local relief, because the pandemic has hit our communities all differently. But we made it a priority to say, not only did we need this relief to be able to stabilize our economies and our government operations, but it was imperative that cities of all sizes received a direct allocation, appropriation, federal grant. Because if you really want to meet the needs of residents and businesses as a result of the pandemic, you need to put the dollars in the hands of local elected officials. So people are watching. Washington is watching on how we spend this money, making sure we use it wisely, but also are looking to see how it will generate a return on investment, because there were a lot of people who didn't think we needed it and actively lobbied against it. This will very much be the foundation on how Washington thinks about an infrastructure package moving further. And I will guarantee you that I will continue to lobby for direct infrastructure dollars to you, but just know that they are going to be this is going to be the test. So help me pass this test, and I will do my best to help you all do it as well. And thank you so much for the opportunity and the work everybody at the league is doing. Thank you so much, Robert.
No, that is a fantastic way to close. And thank you for the advice. And to our members, thank you again for being here. We look forward to talking to you soon.